Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to the live stream. A lot to cover in today's video. We've got gold breaking out to a record all-time high price. We have silver above $69 for the first time in history, a record all-time high close for silver as we head into this holiday season. I mean, this is a major Santa Claus rally for the metals. We'll take a look at the charts. We'll examine some of the fundamental factors that are driving this move in the metals, because there's a lot going on right now behind the scenes and in plain sight. The war drums are beating. A lot of cash is going to get funneled into these conflicts, and investors are looking for a safe haven, but I don't think this is over yet. This is just getting started. And we'll talk about how high the metals could go from taking a look at the charts here. Now, if you want to stack some physical
Introducing
metal,
the first
check this
ever
out.
5-ounce silver maple leaf coin from the Royal Canadian Mint. A historic release with an iconic design that is available in a stunning 5-ounce format for the first time ever. Don't miss your chance to own a piece of minting history. Available exclusively at sdbullion.com.
All right, so got those 5-ounce maples over at SD Bullion. Super cool. Can check those out. Let's talk about gold to start here. So gold broke out of this consolidation, this triangle here, a very small triangle. I mean, we've had a series of these consolidations, breakouts, consolidation, breakout. Finally, we got one that took us to a new record all-time high. Right now, gold at $4,443. Spot price futures are a little bit higher than that, but likely we do have higher prices in store here. I mean, if you look at this previous consolidation, we had gold in April breaking out to a record all-time high around 3,500, and then we had a consolidation until August, then a major move higher, breakout from that took us all the way up to 4,400. So, it would not be surprising to see this next leg potentially take us as high as $5,000. I mean, that seems like easily within the realm of possibilities. Not financial advice, just my take on what is coming, especially in light of the geopolitical instability and the war drums that are beating. We'll get to that in just one moment, because in multiple theaters, it's looking like there's the setup for some major conflicts. And I think part of the reason that we did see the breakout, I mean, from a technical standpoint, it was building, right? But sometimes you need like a catalyst to send the metals higher. And I think that may be a safe haven bid geopolitically. There's record amounts of gold being transferred right now between the BRICS nations. There's potential conflict brewing in Iran, potential conflict in Venezuela. We've got the biggest defense bill ever just got signed into law. But let's take a look at the technicals here for silver. And, let me do a little shameless self-promotion here while I'm at it. And let me tell you why you should follow me over on X. And to do so, actually, let me go back to gold. We'll get to silver in just a moment. But this is a post from... let's see. This was a post, gold breaking out of consolidation today on strong volume, but it already looks like a retest may be underway. Maybe tomorrow we get follow through. And this was from last Thursday. Now, if you go back to the gold chart, that was this candle right here. So we didn't get the follow through on Friday. We got it today, right? And then as this breakout was taking place today, I said gold taking another shot at a breakout from the recent consolidation. This next leg up will likely take us to new all-time highs before year end. Well, that was when gold was at 43.60 earlier today, and gold closed at record all-time highs. So anyway, if you want to get this kind of insight faster than what you'll see in a video, because I can't always just drop everything and make a video or go live, but I can typically shoot out a message, a post. It's not a tweet anymore, I guess, but a message on X, and I do that quite a bit. So if you want to get access to that, just go follow me at x.com/stacksmarter. And if you want to send me a question or anything like that, it's a good place to do it too. I mean, if you engage me in conversation there, typically I will message you back or reply to your comment, whatever. So check it out, x.com/stacksmarter. Now, getting back to silver here. So silver, same story, right? We had this breakout. We had a flag consolidation, a breakout higher. It was consolidating again. And you can see the trend line, this green trend line, kind of tightened up there within that consolidation. So that's why I had drawn that a while ago. Got this breakout, a retest, and then a move today to record all-time highs. So $69 silver. I think $70 silver is well within the realms of possibilities. I mean, it's less than $1 away, right? 95 cents, and we're there at $70. I think that we're going to end 2025 $70 plus. And where are we going to wind up in gold? Well, I think at least $4,500 plus. Big day for platinum, too. Platinum was up, you can see, let's see, it says here the ticker 2089. On the graph, it's up, or the chart here, it's up to 2148. So maybe some kind of weird information regarding futures. Let's see if we switch this view, if that gives us yeah, there we go. Okay, so it closed the day at 2089.40. It did break above $2,100 earlier in the session. So, I mean, if you look at the daily chart for platinum, that's a lot of green candles there, right? Uninterrupted. Now, are we due for a pullback? Are we due for consolidation here? Yeah, maybe. I mean, it looks like gold and silver are just starting to break out, though. So that's probably a good sign for platinum. And not everything's going to move up in lockstep, but it was a good day for the miners as well. We had the SILJ, which had been within this consolidation, gap up at the open. And it put in a nice new record all-time high. Post-market looks like it's even doing well. It closed at $29.53. Post-market $29.69. It was up over $30 at the highs of the day. So the miners doing very well here as well. GDX, same story, gapped up. Didn't move, a tremendous amount there, but that is, I believe, a new record all-time high for the GDX. So I will consider that significant. Now let's get into some of the news here. So this, from December 19th, Trump signs $901 billion defense bill into law, the NDAA. And this is the biggest defense bill on record. Just in time, too, because it looks like geopolitical conflicts are breaking out once again. I mean, we don't get any breaks from this. This is the way the world is now, right? This is deglobalization. This is what we're going to be experiencing for the foreseeable future. And it's not going to be good for fiat currencies. It is going to be positive for the price of the precious metals, though. I mean, I wish we could all hold hands and sing Kumbaya, but that's not the world we live in. So, got to do what you can to get prepared. This is from the Jerusalem Post from today. Iran conducts missile tests in cities across country as Israel warns of renewed threat. So if you thought that everything in the Middle East was settled with the conclusion of the most recent conflict and exchange there between Israel and Iran that concluded with the U.S. strike on Iranian nuclear facilities, well, it's probably not the last you've heard out of that theater. This is a quote from Donald Trump. If they do want to come back without a deal, then we're going to obliterate that one too. Trump stated regarding possible negotiations with Iran, we can knock out their missiles very quickly. We have great power. So the U.S. is set to meet with Israel on December 29th. And this is what Trump had to say regarding Iran. Fairly bellicose language there. Would not be surprised if we see additional airstrikes on Iran. And this is going to make the world want gold because it leads to potential for escalation between the BRICS nations and the West. That means that there could be additional financial warfare. Just look at what happened following the Russian invasion of Ukraine and the sanctions that went on there against Russia, the seizure of assets, etc. Countries like China, India, they're going to look at that and think, things are worsening. Maybe we should get more gold. Maybe that is why we just saw this story from December 21st, published yesterday. China buys record volume of Russian gold in November. This is interesting. So during the first 11 months of 2025, China purchased $1.9 billion worth of Russian gold. And according to the data that was released, they only bought $9 million worth of gold from Russia from January to September. So the overwhelming majority of the volume of these purchases was in October and November. So nearly $1.9 billion worth of gold transacted between Russia and China over the course of the past 2 months. What does that mean? Why are they selling this gold? Well, part of it maybe is the BRICS nations now exchanging gold. I mean, that's what they're doing, right? None of this was settled in dollars. At least I'm fairly certain. There's nothing to corroborate that here, but I would bet that very few of those purchases were settled in dollars. They were likely settled in renminbi or rubles or some combination thereof. And we know that the BRICS, behind the scenes, they're working on these systems of exchange that bypass the dollar. It's called de-dollarization. I've done a bunch of videos on it. Russia and China have been working on it for more than a decade. There have been Congressional Research Office papers published on this. And if they're going to de-dollarize, what are they going to use as their default means of settlement? Well, it's likely going to be gold. There's a story that we've covered several times in previous videos regarding the Iranian central bank and the Russian central bank and their project to create a gold-backed tokenized currency for cross-border settlement. And that story is that was published, I think, 3 years ago in 2022. So when you start seeing things like billions of dollars being exchanged between Beijing and Moscow in a very short period of time, they weren't transacting much gold for the first several months of the year, right? Between January and September, $9 million worth. Then all of a sudden, $1.9 billion worth. What does it mean? It's not a sign of imminent catastrophe, but it does show that both countries are preparing for something. What is that? Well, likely a global conflict. We've also got an aspect of this conflict cooking up right next to the United States in Venezuela. So this is from yesterday, published in Al Jazeera. U.S. pursues third oil tanker off the coast of Venezuela. So Trump, the current administration, they've imposed this embargo basically surrounding Venezuela and stopping any of these oil tankers that may be carrying sanctioned oil. And it's very likely that we may be headed for some type of regional conflict involving regime change in Venezuela. Now, on an almost humorous note, it was Venezuela's Maduro's application to the BRICS nations that was denied. I guess Brazil wasn't too happy about that. So, Brazil's right there near Venezuela. I guess they have some issues regarding their close proximity. So Brazil didn't necessarily want them in BRICS, but they are allied with Russia and China. Notably, Venezuela's got the world's largest petroleum deposits. They're not currently producing those. Years of state-run oil agency neglect, etc. Socialism have gutted their oil industry, but it's still there. It's still in the ground. It's still important, and it's still nearby. And I don't think that the Trump administration really likes having a ally of China and of Russia and of Cuba sitting there on the border. So, this conflict has been cooking for a while. And with the current military buildup in the Caribbean, it looks to me like, something's going to come of it. It's pretty expensive to maintain this kind of a troop presence and this kind of a buildup. They don't usually do it just to blow up some, fishing boats or drug boats or whatever and seize a few carriers. There's something bigger at play here. And anytime that there's this kind of an intervention, there's always the risk of blowback. There's always the risk of miscalculation and expansion of the conflict. And so it makes sense that there would be a safe haven bid as this conflict too escalates. Of course, there's always the reason that gold and silver almost mathematically have to rise, that you don't need to delve too deeply into the numbers, to figure out why they're up today. We got $38.5 trillion in debt. Every time I do a live stream, it's like $100 billion higher, maybe more if I wait a couple days. This number is going to hit $40 trillion next year, almost guaranteed, probably significantly higher than that. And you've got to understand that this kind of borrowing, it's unsustainable. The only way it can be paid off is with devalued currency and with the big, beautiful bill. We have just witnessed that neither party has anything regarding or resembling fiscal prudence here or fiscal responsibility. So the name of the game is just going to be borrow, borrow, borrow. It doesn't matter who wins at the election. It doesn't matter who you vote for. The debt is going up massively, right? And some might say, well, what about the tariffs? Well, here you see on the debt clock, they've got tariff revenue. So tariff revenue per taxpayer, great, $3,247. What's the debt per taxpayer? Oh, $329,000, 646. Yeah, because debt per citizen doesn't really matter, right? It should be debt per taxpayer. We're the ones who are on the hook, and the spending isn't going to get reined in. So don't worry. I mean, your entitlements will be paid. Your Social Security checks will go out. Problem is, it's like Alan Greenspan warned more than a decade ago in congressional testimony that they can guarantee benefits in any amount, but they can't guarantee the purchasing power, right? And that's what we're seeing, hard assets right now rising. We've got the M2 money supply, so this is all the currency out there, or one measure of it at least, which is at a record all-time high, and yet the Fed, they've just announced at the most recent FOMC, not only are they cutting rates, but they're beginning to expand the balance sheet again. What does that mean? They print fresh money into circulation. They use it to buy government debt. They've done this numerous times, like in QE1 here on the chart, you can see during the Great Financial Crisis. Then they tried to draw it down, didn't work. Things started to break. They started again in 2019 buying assets. This is kind of like what just happened, right? They just stopped selling off their balance sheet because things started to break, and they began buying treasuries again, so printing money, buying it from the government, then spends it into circulation, expanding the money supply, debasing the currency. Then in COVID, of course, trillions of dollars got printed here on the balance sheet, reached a peak in 2022. They realized, whoops, food's getting too expensive. Even the fake CPI numbers are getting too high, so we better start drawing it down again. Then, whoops, you had the financial crisis there when the bank started to fail in 2023, had the Bank Term Funding Program. Yeah, let's just start those printing presses again. Well, here, we've managed to get down to $6.5 trillion, but they've ended QT. QT is done. They just announced that they're buying treasuries again to the tune of $40 billion now, and on an ongoing basis. And I don't know, put a 1 in the chat if you don't think that it's going to stop at just that $40 billion, right? It's going to be like in 2019. They slowed it down. They did like QT Junior down there, but then the lending facilities, the overnight lending facilities started to break, so they had to print. And then just so conveniently, they got a crisis that required the printing of massive quantities of currency, trillions and trillions of dollars. Well, now we've gotten to the point where things started to break. They reversed rapidly too. Wasn't it strange that they announced at the FOMC, I think in November, that they said we're going to start drawing down QT in December. And then at the December FOMC, they had already done that, and they said, hey, we're going to buy treasuries again. I mean, they didn't waste any time. So money supply is at a record all-time high. Debt is soaring. And the Fed just told us, well, hey, guess what we're going to do? We're going to buy more debt from the government. We're going to expand our balance sheet, even though precious metals are at record all-time highs, even though the M2 money supply is at a record all-time high. So, I mean, you can see where this is going, right? You don't even need the BRICS nations. You don't need de-dollarization. We're doing it to ourselves. These other factors, like the fact that a war is right around the corner, at least it seems that way. Markets are treating it as such. And the fact that, the BRICS nations are de-dollarizing and transacting record amounts of gold, that's just going to make this happen faster. So anyway, that's why, in my view at least, gold and silver breaking out to record all-time highs today. I'm glad that I have been stacking. I'm still stacking, even at record all-time highs, because here's the thing. Yeah, silver's $69. Does $30 silver sound awfully nice right now? Yeah, I miss those days, and I certainly was trying to get as many people on board as possible. I don't give financial advice, but obviously, there's a bias here towards my thinking. I think it's important to have hard assets, and I've been trying to educate people about the importance of hard assets for years now. And I think if you listened to that and you decided on your own that it was a good time to stack, you're probably glad you did that now. Well, moving forward, will there be ups and downs? I mean, could we see $60 silver again? Could we see $50 silver again? Yeah, I suppose. If we did, I'd be loading up the truck, because I think ultimately when you look at all the factors, the way that the geopolitical landscape is playing out, the way that we're handling our own finances domestically, the potential for the metals is very high, right? It seems like pie in the sky numbers when you talk about $10,000, $20,000 gold, when you talk about $200, $300 silver. But, when silver was like $20, people were telling me it would never see 50 again. And here we are a couple years later, and it's at $69. So, I haven't sold my silver. I'm going to be hanging on to my physical for a while yet, and hopefully adding to the stack. Would I like a pullback? Yeah, a pullback would be great. I wish that I had taken greater advantage of previous pullbacks, but I just don't know that there's any guarantee that we're going to get that. I mean, just look at gold, right? Gold just broke out today to a record all-time high. So it's been consolidating. Like I said, look at these previous consolidations. You sometimes see a $300-$400 jump. Sometimes you see, look at this one, broke out around 2670, broke out to $3,500. So almost a $900 move there. So once gold gets moving in this bull market, it has a tendency to run quite high. It'll get overbought at some point. It'll correct. But it's like, is the correction going to be from $69? Is the correction going to be from $4,400? Or is it going to be the next time silver corrects that, it corrects down to 75 from 90? That's possible. So calling these short-term moves is difficult, but the chart looks really good. The chart, if you zoom out, of course, there's the big chart, the big cup and handle that we just broke out of, that you can derive a price target of anywhere really from $100 based on this to, thousands of dollars if you do it on like a logarithmic chart and you figure out the breakout, how high that can go in percentage terms, very high. So, $69, it sounds like a lot for silver. I think a lot of us in the stacking community are just like traumatized by years of ridiculously low prices. And so now when you hear 69, it sounds like a lot, but I think for where we're headed, it's not going to seem like a lot in the future. 5 years from now, looking back, $69 silver is going to be like the good old days. At least that's my take. It's not financial advice. I'm just telling you my feel for this market, and I've been following this market pretty closely for a while now. Not as long as a lot of the people out there, but for years now. And again, check me out on x.com/stacksmarter. Sign up for the free newsletter with the link down in the description. Click the subscribe button if you haven't yet. If you're still watching, we're like 20 minutes in. Click the subscribe button. You must have liked something if you stuck around this long. And a lot of people who watch these videos actually are not subscribed. So please subscribe to the channel. We'll be at 100,000 subs soon. That's going to be exciting because you get a silver plaque. Forget the gold plaque. I don't care about that one. I want the silver one. Anyway, thanks for watching, everyone. Stay safe and happy stacking. Have a Merry Christmas. Have happy holidays. Hope you all enjoy yourselves this week. Enjoy some time with your family. Stay safe, and I will catch you next time. Thanks for watching, everybody. Smart Silver Stacker, out.